What is your takeaway?
I would say that the Bank of America numbers, as you pointed out, were a strong bottom line number. Many of the metrics we monitor for these large banks came in very positive for Bank of America. The net interest margin, for example. We'd also point out that the expense control at Bank of America is quite strong, and they continue to focus on reducing expenses to a $53 billion number for next year. The Wells numbers, on the other hand, they obviously had the one-time charge, which we take out, so they came in line with expectations on the bottom line. But as you pointed out, the revenue growth was not as strong as some of the other banks as they continue to work their way through the scandal that they've been dealing with.
And the big question that seems to be arising this quarter from banks is what is the credit quality of their consumer loans? So you had charge-offs for the reserves rising for the consumer unit for Citi, $510 million faster than they expected, $300 million for J.P. Morgan, $167 million for Bank of America. What's your read on that?
I would say that right now we're not too worried about it. We have to remember, relative to the global nature of these companies, they're handling the higher level of credit card expenses due to these elevated charge-off numbers. We also have to remember they're coming off a very low basis. Now, if these numbers are to continue to grow at this rate, and we're talking in 6 months, then there will be a greater concern. But I don't think we're going to see an acceleration, going forward from the current level, and therefore it'll be very manageable. These are big, diversified companies, and they can handle the elevated levels today. But again, if they continue to grow at this rate this time next year, there will be bigger concerns.